Welcome to today's discussion, and I'm Sonia.
And I'm Simon. We've got a packed episode covering some of the biggest stories in tech and finance. Let's start with the latest on OpenAI.
OpenAI is reportedly considering drastic price cuts to stay competitive with Anthropic. The Wall Street Journal reported that OpenAI might lower prices for tokens, which are the central unit for gauging AI costs.
That's interesting. So what's driving this decision? Is it purely competitive pressure?
According to the report, OpenAI is seeking to win customers from Anthropic. The discussions are still in flux, but it seems like a strategic move to stay ahead in the AI market.
How significant are these potential price cuts expected to be? The reporting doesn't give a specific number.
The exact figures aren't clear, but the implication is that they could be substantial. The article mentions that the company is considering drastic reductions.
So what does this mean for the AI market as a whole? Are we seeing a price war brewing?
It's possible. If OpenAI does lower its prices significantly, it could put pressure on other AI companies to follow suit. The market might see a shift towards more competitive pricing.
That ties into the story about TCS partnering with Anthropic.
Tata Consultancy Services has announced a global partnership with Anthropic to help enterprises scale AI adoption. They plan to equip 50,000 employees with Anthropic's Claude AI models.
Right. This partnership is significant because it shows how major companies are investing in AI talent and infrastructure. TCS is setting up a dedicated business unit to work with Anthropic's Claude models.
What does this mean for the enterprise AI landscape? Is this going to change how businesses operate?
The partnership aims to help customers accelerate their AI adoption. By training 50,000 associates, TCS is creating a large-scale AI-capable workforce. This could lead to more sophisticated AI implementations across various industries. Let's move on to the story about SpaceX's IPO. SpaceX is set to make its Wall Street debut with 555.6 million shares going up for sale at $135 apiece. This could be one of the largest IPOs ever, valued at $75 billion.
That's right. The IPO is priced at $135 per share, and both institutional and retail investors are expected to be interested. This could significantly impact Elon Musk's wealth, potentially making him the world's first trillionaire.
Wow, that's a staggering valuation. What are the implications for the space tech industry?
The success of SpaceX's IPO could attract more investment into the space technology sector. It might also encourage other private space companies to consider going public.
And speaking of significant financial moves, let's discuss the center's decision to waive excise duty on higher ethanol-blended petrol.
The government has exempted excise duty on petrol blends containing 22%, 25%, 27%, and 30% ethanol. This is expected to encourage the adoption of higher ethanol blends beyond the current E20 mandate.
Exactly. The move aims to reduce crude oil imports, boost domestic biofuel use, and increase energy security. It's a strategic step towards promoting cleaner energy sources.
How does this exemption impact the current E20 mandate? Are we looking at a faster transition to even higher ethanol blends?
The exemption goes beyond the current E20 mandate, indicating a willingness to push for even higher ethanol blends. This could accelerate the transition to more sustainable fuel options.
That's a positive development for the environment. Let's get back to SpaceX for a moment.
The IPO was priced at $135 per share, raising $75 billion. This makes it potentially the largest IPO in history.
Yes, and the stock is set to debut on NASDAQ. This is a significant milestone for SpaceX and could have far-reaching implications for the space industry.
So, what are the expectations for SpaceX's stock performance? Are there any concerns about the valuation?
The reporting suggests that both institutional and retail investors are eager to buy into the IPO. However, there are always risks associated with high valuations and the competitive nature of the space tech industry.
As we wrap up, it's clear that these stories are interconnected through themes of innovation and competition. From AI pricing wars to significant IPOs and cleaner energy initiatives, there's a lot happening in the tech and finance world.
That's all for today. Thanks for tuning in, and we'll see you later.
Goodbye.